Ladies and gentlemen, I welcome you all to the H1 FY'25 and maiden post-earnings conference call of JB Laminations Ltd. Today on the call from the management we have with us Mr. Mudit Agarwal, Managing Director, Mr. Subhash Raghav, Chief Financial Officer, Ms. Aarti Chauhan, Company Secretary, and Mr. Ashutosh Singh, Deputy General Manager, Finance. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. We will now request the management to quickly run us through the investor presentation with the business performance and highlights for the quarter, their growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team. Mudit, you can go.
Thank you. Good morning, everyone. I hope you're having a nice day. Thank you all for joining this call today. We are new to the markets, and this is our first investor call. So bear with us if there is any issue. We would like to start by introducing our company. Our company is JB Laminations Ltd. We have a strong employee base of 300 plus numbers. We are in the business of production of CRGO silicon steel cores for the power and distribution transformer industry of India, as well as exports. We established our company 35 years back in 1988. We have two manufacturing units based in Noida and Greater Noida. Currently, our installed capacity is 11,700 metric tons. And we are looking to increase our capacity to about 18,000 metric tons with addition in the second unit, which is the Greater Noida plant. Our products include cut laminations, split coils, and assembled cores, all going into the transformer industry. We have an in-house lab for raw material and finished goods testing, and we also have a tooling division for blade sharpening that is used for cutting of sheets. Currently, we cater to transformer cores up to 220 kV class. And now with the new expansion, we have a plan to target customers in the range of 400 and 765 kV class. Next slide, please. Our journey has been quite long. It's been a long 35-year journey. We started exports in 1995. We received the ISO certification in 2011. We also are approved by Power Grid and PSPCL. That happened in 2015 and 2016. We started Unit 2 operations in 2017, and we received certificate of conformity from BIS in 2021. And we became one-star export house, and we converted our company to public limited in 2023 and 24. Next question. Next slide, please. Our promoters are Mr. Munish Agarwal, who started the company, who founded the company, and Mr. Mudit Agarwal, that is me. I joined the company in 2012, and Ms. Sunita Agarwal, she has also been with the company since the last 35 years. Next slide, please. Our core team exists of our board of directors, which includes the three promoters, as well as our three independent directors, Mr. Atul Ladda, Mr. Arun Verma, and Mr. Y.K. Gupta. Our team exists of our CFO, Mr. Subhash Raghav, who has been with the company since inception. Ms. Aarti Chauhan is the company secretary. Mr. Paras Dhawan is leading our sales, and Mr. Ashutosh is involved in finance. Next slide, please. We have a strong customer base in India, as well as some customer base in export market. In India, our presence is shown on the map. And in the export market, we are catering to 10 plus countries and hoping to add more countries and more customers in the future. Next slide, please. We have two units of production. Unit 1 is on the left, which is a total area of 2,800 square meters with a capacity of 6,600 metric tons. And on the right is Unit 2 with the capacity of 5,100 metric tons. Total area is 8,000 square meters. And in both the plants, we have the required machines, automatic machines for cutting and slitting, and also testing for CRGO steel. Next slide, please. So our process consists of purchase of raw material, then sample testing in our lab. Then the first process, actual manufacturing process, is slitting, then cutting. Then there is assembly of the cores, which is a labor-intensive process. And then there is final testing and then dispatch. Next slide, please. Our customer base includes big names like Skipper, Supreme Power, which recently got listed on the NSE Emerge platform, Maiden Transformer and Transmission and Distribution, SNR Transformers, Shirdi Sai Electricals, Bharat Heavy Electricals, Crompton Greaves, Indotech, and Canohar Electricals. As far as end customers are concerned, these transformers are generally going to customers like Adani Power, KPTCL in Karnataka, Power Grid, PSPCL in Punjab, and the Indian Railways. Our top 5 customers consists of 42% of our total revenues. Next slide, please. Our products include cut laminations, slit coils, and assembled cores. Basically, these 3 products are different steps of manufacturing. So it depends on the customer's requirement. All of these products go into the transformer manufacturing as the core of the transformer. Next slide, please. Our competitive strengths include a strong promoter and management team, which has a long experience of 35 years. We have the experience of producing CRGO with high accuracy and speed, which ensures the quality and safety of transformers. We have excellent relationships with our customers as well as suppliers, and we have certain approvals like Power Grid up to 220 kV class. We are soon planning to go for Power Grid approval of 400 kV class in the Greater Noida plant. Next slide, please. So coming to the new expansion process, we are, as I said, we are targeting customers in the range of 400 and 765 kV class, considering that there is scarcity of suppliers as well as customers who can supply good quality transformers to the end customers, like especially Power Grid. We also plan to add export customers, which will give us a better margin. Recently, we also imported high-end lab equipment from Germany, which has already has been received by us, and we will soon establish a world-class lab, which will be accredited by NABL. Further, as we pointed out earlier, in the Greater Noida plant, we have a new facility where a new shed which has all the facilities required to process 400 and 765 kV class orders, and that takes our capacity to 18,000 tons, which we are hoping to utilize and utilize on a full capacity basis in the next financial year. Next slide, please. Our key performance highlights include production data, the total volumes that we have produced. We have actually increased our volumes compared to last 2.5 years by about 20%. Though the prices came off, the raw material prices as well as the selling prices, but we were able to increase the quantities of production by about 20%. In terms of capacity utilization, till last year, we were at a level of about between 80 and 85%. Currently, we are dealing with a capacity utilization of about 90 to 95%. This has been possible because of better orders on the machinery, on the workstations that we have, as well as to some extent, we also were facing shop floor area issues. So space has been created with the new plant coming in, and we were able to utilize a better capacity in the last half year. Next slide, please. Our revenue has been close to 153 crores, which is almost at the same level as the previous half years. This was, as I said, this was mainly because of the prices coming off, but the volumes have increased. Our EBITDA margin has increased because on a per kg basis, our EBITDA margins do not vary with the raw material or the sale prices. Hence, the margins on a percentage basis are increased to an extent of 52% YOY and 39% at half yearly basis. Our PAT margins have increased by 49% on both YOY and HOH basis. Next slide, please. Our half yearly numbers, as I previously said, our sales was 153 crores. The PAT margin was 9.4%, which was contributed mainly because of decrease in the cost of materials consumed. Our expenses, other expenses, employee expenses, and everything else has been mostly in line with our previous performance, and we continue to keep that at the same level. Next slide, please. Our annual financials for the previous 3 years have been going up and better. Our revenue has steadily increased from 141 crores to 302 crores in FY'24. Our EBITDA margins are constantly going up from 8.8% to 10%, and now reaching almost 15%. Our PAT margin has also increased from 4% to 6.4%, and in this half year, it has gone up to 9.4%. Similarly, our focus is on return on equity and return on capital, which we hope to continue to keep at higher levels, considering our low equity base and higher profit margins. We will continue to also focus on debt to equity ratio of as low as possible. And in the future years, we will plan to have a good mix of debt and equity to fuel the further expansion. Next slide, please. Like I said, our sales increased from 141 crores to 302 crores. The revenue CAGR has been 46%, and the PAT CAGR has been a healthy 84%. Next slide, please. Our balance sheet is becoming healthier as we move forward. We had a very healthy equity base of 62.9 crores at the end of FY'24, and now with the IPO that happened in September, our equity base has further increased. Our borrowings are on a decreasing trend, and we will continue to maintain the borrowings in a healthy debt to equity ratio. Next slide, please. Our industry is growing at a healthy rate. We believe that the Indian transformer market is growing at about 10 to 11% on an annual basis, which is a very good growth rate considering our power sector. We would like to participate in the growth of our customers as well as our end customers who are buying transformers. The biggest buyer of transformers in the Indian market is the government, but we are also seeing an increase of transformers demand from the private sector, especially with solar and wind energy is concerned. Because for new generation types, there will be requirement of new transmission and distribution infrastructure that will require new transformers. And with the requirement of new transformers will come the requirement of CRGO steel. Next slide, please. Like I said earlier, we are proud to be ISO certified, and we have a Star Export House certificate that is given to manufacturers who have a consistent and increasing export. We are committed to quality to our customers, and we hope to increase our business keeping in mind the needs of the customers. Thank you. If anybody has questions, I would be happy to answer them.
Thanks, Mudit. We already have people in the question queue. We'll immediately go to the Q&A. Right. We'll take the first question from Pareen Dodia. Pareen, please go ahead.
Yeah, hi sir, am I audible?
Yes.
Yeah, so my first question is, sir, given that we are currently operating at 84% capacity utilization and like we are projected to reach 100% by end of FY'25, so can we realistically expect our revenues to approach approximately 370 CR in FY'25?
So our capacity utilization till now with the existing capacity, while we added a very small capacity in the last 6 months, when I say small capacity, which was put to use, so that is why it moved from 11,350 to 11,700. Going forward, we in October we have already put to use the new capacity, which will be 18,000 tons. So as I said, right now till September, we were at a utilization of about 94%, which will certainly come down as the new capacity kicks in. So we are hoping to end the year with a capacity utilization between 70 to 80% on a total basis.
On over 18,000, right?
Correct.
Okay. And so my second question is like we are establishing new manufacturing unit for like 400 kV and 765 kV class products. So like are there any other publicly listed companies who's currently operating in this space?
You mean specifically for 400 and 765 kV class?
Yes, sir.
No, there are no public listed companies who are operating in that.
So basically you're the only one right now.
Yes.
Okay. Yeah. Thank you.
We'll take the next question from Agastya. Agastya, you can go ahead, please.
Am I audible?
Yes, yes.
Hello. Thank you, Vinay bhai. Good afternoon, everyone. Sir, well, first of all, thank you very much for the opportunity and thank you very much for holding the con call immediately after the earnings. I really appreciate it. I'm pretty sure everyone else does that as well. Sir, a few questions from my side. First is that can you talk a little bit about the sourcing of CRGO? Where are you getting the CRGO from? What kind of tie-ups do you have? And on the expanded capacity, so not just this 18,000 tons, you have also taken a land on lease. So that's, I believe, 3,600 square meters, right? So how much capacity will come there? And then for the entire capacity, including the new greenfield one, how is the sourcing looking like of CRGO itself, of the steel itself?
Okay, so first question would be about sourcing. We have tie-ups with most of the CRGO steel producing mills. There are about 10 to 15 CRGO mills in the world who are, commercially and largely producing CRGO steel. We have the tie-ups with most of the mills, and we directly purchase from the mills as well as we purchase through their stocking centers or through traders within India. So our import, so as I said, CRGO steel is mostly an imported product.
Yeah.
But our imports are less. We almost have a ratio of about 80-20. 80% is domestic and 20% is import.
Okay, but one thing is for sure, you won't have any sourcing problem even with the expanded capacity because CRGO, I believe, has been perennially in shortage. It's the key bottleneck in transformer industry, right? Every transformer OEM says that CRGO is an issue. So sourcing is tied up for the expanded capacity. We should assume that.
Yes, and and this is the main reason. I mean, so the problem is not that the CRGO is in short supply. It happens because there are multiple grades in CRGO steel. And
Yeah.
the customer generally has a very shorter forecast of which grades will be required in with what quantities, and that becomes a problem for us also sometimes. So we basically purchase CRGO steel different grades on the basis of our projection, basis of our customer feedback. And because of that, our inventory level has also gone up. So we are basically covered with a good level of inventory with respect to targeting the new customer base.
Understood. Mudit, what about this new land that you have taken? How much capacity do you plan to build there?
So the basically what happened was this piece of land is something that came up to us, and it was a good opportunity. We saw the facility. It was already a very good, very well built facility. So we have already signed the lease on that basis, and now we are
Okay.
evaluating the capacities that we can optimize with the 3 units, and the best possible scenario that can be formed from that, considering that what is the capacity that we can put up and what is the market segments that can have the most demand and margins, of course. So we
Understood.
believe that in all 3 units put together, theoretically, we can go up to about 25 to 30,000 tons.
In all three put together, fully debottlenecked.
Correct.
That's 30,000 you said? 30?
Yes.
Okay. And Mudit, you mentioned in your opening remarks that your EBITDA per kg, yeah, gross profit per kg is a fixed amount and it doesn't change. But if I look at the H1 numbers, your on a per ton basis, your profitability has jumped quite considerably. So, what should be the base that we should estimate? I mean, it is going to mean revert back to the numbers that you have reported in FY'23 and 24, which are very close to each other? Or should we expect this H1 number to act as a base going forward?
See, what I mentioned was that our margins do not go up or down with the changes or fluctuation in the raw material and the sale prices. So, say if raw material prices are averaging 200 rupees, our margins will still be at, say, a level of 250 rupees. Had they been 250 rupees, our margins will be, say, 300, 305 rupees. So my point is that our EBITDA margins do not fluctuate with the raw material price fluctuation. Having said that, we were forecasting that the margins will increase since the last half year,
Right.
because we are reaching full capacity. That is one point. Capacity utilization has been really good. We are able to select the orders that are better for our output as well as margin base. So
Understood.
even if you, on a PAT basis, even if you see that, considering that the prices would not have dropped, volumes increased by 20%. And if you consider a 20% increase in the turnover, say theoretically our turnover would have been 180 crores. So on that basis, the margins would be around 7.8%, right? So we are projecting margins around that level.
Okay. Two final questions from my side. One is on the capex for the next 2 years. What do you have a capex plan already in place? And the second question is, so capex, let you answer first.
CapEx is already done in Unit 2. Most of the CapEx is done. As I said,
Okay.
now we are ready with the capacity of 18,000 tons. We can slightly go up still in Unit 2, but the new expansion will happen in Unit 3.
Understood. And final question is that you have mentioned that you now want to venture into the 400 to 765 kV product lines. So if you move to that segment, what happens to your realizations and profitability? I'm assuming that they would improve.
Yes, we are expecting the margins to improve. However, as I said, we have already been able to improve the margins considerably. It would depend on the ratio of the 400
Mix.
and
Yeah.
kV class orders.
Right.
But in general, I can say that 400 kV class and 765 kV class would fetch gross margins of better gross margins of about 2 to 5%.
That is 2 percentage points to 5 percentage points. So just to clarify, you have reported 23% gross margins this quarter,
Yes.
excluding the other income. So that those will approach 25 to 27%. Is that like a decent understanding? Yeah, for the new class. I'm not saying blended margins.
Just 1 second. You mean specifically for 400 765, right?
Yeah. So as of now, you are in the segment, whatever segments that you are operating in, you have reported 23% number for this first half and 17.5 for the entire year last year. So
Correct.
let's suppose that you move 100% to the higher class, 100%, right? So then this 23% would become 25 to 27%, something like
Correct.
that, right?
Correct. Yes.
Understood. Thank you very much, sir. And I again appreciate the fact that you have conducted the con call immediately after your first earning release. Thank you very much. Thank you, Vinay bhai. Thank you.
Thanks, Agastya. We'll take the next question from Naman Parmar. Naman, you can go ahead.
Yeah, good morning, sir. Good afternoon, sir. Thank you so much for the opportunity and great set of numbers, sir. So, firstly, I just wanted to understand on the macro side that the CRGO steel and the amorphous core, these basically major used in the transformer. So, your new capacity that you are planning to add, so what will be the contribution of the amorphous core and how the amorphous core is currently majorly imported from or it is majorly sourced from the domestic?
So amorphous core is a smaller market compared to CRGO steel because it is used only in distribution transformers. It has its own limitations. It cannot substitute CRGO steel in the power transformer segment. So that is why our focus is going to be limited in amorphous cores. Having said that, in Unit 2, we have expanded only for CRGO steel. In Unit 3, we are looking at various permutations and combinations of what will be the best combination. And most likely, that is the place where we will be setting up CRGO as well as amorphous core. Amorphous core sourcing is mostly from imported sources. It is not made in India, just like CRGO steel. So yeah, there are about three or four BIS approved manufacturers in China and Japan. Sourcing will be from that.
Okay. So currently what you are means facing on the issue on the CRGO side is government has any changes on the BIS side to increase the supply of the CRGO in the market? Or what's your take on the supply of the CRGO and amorphous?
I can't really comment on the amorphous situation, although when we talk to suppliers of amorphous steel, amorphous metal, they claim that there is no problem in supply. With respect to CRGO steel, there has been certain restrictions by the government on the Chinese suppliers. However, like I said earlier, we have sufficient ties with the other CRGO steel producers to ensure that our requirements are fulfilled.
Okay. And thirdly, on the means you are telling the amorphous is a very small market in the overall market. So how much revenue you expect from the amorphous when the third plant get commercialized, and how much from the current business, the CRGO one?
So, in total, like if we consider the capacity, capacity will not be more than 10% of the total capacity at the best case scenario.
Okay. And what was the export sale in the current half year, and how much you expect the export to contribute in the future? And there is any margin difference between the domestic and export side?
Our exports in the last half year was about 11%, and previously I think it was about 13 to 14%. We will continue to keep this level constant because export is mostly distribution transformer cores. So the volumes will be lesser than the power transformer cores that we are targeting in the near future. So even if we are able to, keep up the same ratio with the increasing volumes, we will be happy.
Okay. And any new product that you expect to enter in the future, like transformer, radiator, tanks, and this type of?
We have multiple plans, but we will focus on CRGO steel and amorphous core because we are experts at core manufacturing. So that will be our first focus. As long as we are able to get growth in the core manufacturing part of transformers, we will not diversify. Once that market gets saturated in the future for us, then we will think about diversification.
Okay. And lastly, on currently you are approved till 220 kV from PGCIL, right? So for 400 and 765 kV, when did you expect to get the approval from the PGCIL?
Uh, so our new facility was actually delayed by about 2 months in getting it started and running due to various reasons, teething issues. So now that we have started the facility, we have already actually executed a 400 kV class order. So about 4 to 5 crores of sale has already happened in the 400 kV class range. And with those precedents and examples that were already set, we will go up to PGCL and get it approved. So that should take about 3 to 4 months if everything goes well.
Okay. And what's your debt plan to how much you expect to reduce your debt from the current level? Any?
We intend to keep the debt level at the same because when we came out with the IPO, our main objective was to fund the working capital requirement that will come with the higher volumes. So considering that last year we did about 300 crores turnover with the debt that we had, we want to keep it at pretty much the same level with increasing turnover.
Okay. Thank you so much, sir, for answering all the questions. All the best for the future.
Thank you. Thank you.
Thanks, Naman. We'll go to the next participant, Dhruv Agarwal. You can go ahead, please.
Yeah, good afternoon, sir. Uh, Congratulations on the very good set of numbers, sir. Firstly, sir, I have few questions. Firstly, on the amorphous metal core that the company is planning to enter into, what kind of margins one should expect and the peak revenue that the company would be able to achieve, sir?
Amorphous metal does not have any better margins than CRGO steel. We are hoping that the margins will be as good as or maybe slightly lesser than the existing margins of CRGO steel.
Sir, what kind of differential do you expect, sir? If in CRGO core you are earning already at the EBITDA margins of 15%, so on the amorphous core, what kind of EBITDA margins one should be expecting, sir?
So I can talk about the gross margin. Or no, I
Not
can
an
actually
issue.
talk about the EBITDA margin also. So we can expect a gross margin of about 18 to 20%.
Okay, right. And sir, in the last participant, you said that the TAM for the amorphous metal is very small. So what is the total addressable market in India for that and the percentage share that you would be addressing in the amorphous, sir? Can you highlight that?
So we believe that amorphous market currently is about 60,000 tons in
Okay.
terms of tonnage annually, on an annual basis. And depending on the margins, like I said, if the margins are not very attractive, we will not increase amorphous cores after a certain level. So on a very basic level, we are targeting about 1,000 to 1,500 tons on an annual basis. and we can take it up to about 3,000 to 4,000 tons.
Okay. And sir, in one of the previous participant, you said that for all the three units, you are targeting around 25,000 to 30,000 metric tons of capacity. Currently, we have 18,000 tons in amorphous, and around 2,000 tons would be added in amorphous. So the rest capacity you are like targeting to achieve, it would be from the like CRGO core only, right, sir?
You mean 18,000 tons is CRU, right?
Yes, and the 2,000 tons is from amorphous, right? And the rest that you are targeting are to achieve of 30,000 tons that you are targeting to achieve. So it would be from CRG only going forward.
Absolutely, yes.
Yes, okay. And sir,
So we'll have to restrict that now. We need to allow other participants to also ask questions. I would request to come back in the line.
okay,
Yeah.
sure.
Yeah. Request all participants to restrict the initial round of questions to 2 or 3. We'll go to the next participant, Sunil Jain. Sunil, you can go ahead, please. We'll move to the next participant, Aditya Mutha. Aditya, you can go ahead, please.
Hi, good afternoon, sir. Congratulations. Sir, in FY'24, our production was 9389 tons, right?
Yes, correct.
And our sales was 303 crores.
Yes.
So revenue per ton was coming around 3,22,718. But this half year, that number has gone down to 277. So why is that divergence for 20%?
You said 303 divided by 938. Yes, correct. So, like I said, the raw material prices fell in the last 9 or 10 months. That had an effect in majorly in the last half year. Raw material prices fell primarily because, I mean, the reason of raw material prices fluctuation is the global supply and demand of CRGO steel. It also depends on what is the demand structure in the US and European markets. So because CRGO steel is highly dependent on the projects of power projects that come across, from the utilities all over the world. So if a certain power project comes up in a big way, the demand suddenly increases, and if power projects are not there, then the demand can decrease. So based on that, the fluctuation can be there.
Okay, and this could be a reason for increase in margin also?
Yes, to some extent, we have also received inventory gains, but that is not a very big portion.
Okay. And one follow-up question. When will be the capex come online?
So we have already started, as I said, we have already started executing orders, and we have already executed one order of 400 kV class also.
Okay, thank
So
you.
the
That's it.
capacity came up in October.
Okay, thank you. Congratulations. I'll get back in the queue.
Thank you.
Thanks, Aditya. Sunil, you can go ahead now, please.
Yeah. Thank you.
Yeah.
So, can you talk about bit industry in India, specifically who are the competitor and how much of it is imported and how much share you have in the market?
So the entire CRGO steel industry is about 3 lakh tons in India on an annual basis. And in FY'24, we did about 9,400 tons. So that becomes what, 3.5% of the market share. There are few players who are in the range of 25 to 30,000 tons, and then there are players in the range of 15 to 20,000 tons. Then we are at a level of between 10 to 12,000 tons.
So it's basically the raw material is imported, and then CRGO, these all seeds are manufactured here and then sell to the transformer. There is no direct import or direct competition from import for you.
You mean as our competitors, if there is direct competition from foreign players?
Yeah.
No, because of two reasons. One is that BIS is applicable on the product. So, there is a lethargy amongst core manufacturers outside India to get BIS approvals. Second, and the bigger reason is that the lead times are very short. So, for example, our order book is generally 1 to 3 months. So within that lead times, and the each customer's order is tailor made. So we need to stock up inventory first, and then the order comes. So based on that, the lead time is so short that a player from outside India will not be able to serve the market.
Okay. And is there, like, you are increasing the capacity, your competitors are also increasing the capacity?
Yes, competitors are increasing capacity, but I think there will be a healthy market for everybody if the entire pie increases.
So, do you have anything like order book or something, or it's, you said the orders are for 1 or 2 months, so there will not be order book?
Right. So there, I mean, order book generally does not play a very big role because we have received plannings from the customers, but those are not in the form of purchase orders. In terms of purchase orders, as of the end of as of the end of 30th September, we had an order book of 62 crores, which comprised almost 50% power and 40% distribution transformer ports.
If I see your this quarterly balance sheet, the inventory has increased substantially. Any specific reason for that?
Right. So capex, as I said, capex got delayed by 2 months. We were actually hoping to, start the new facility 2 months back, and our so because of that, we actually accumulated inventory, and now that inventory is going to get used. So in purchasing CRGO steel, there are multiple grades, and based on that, there can be longer lead times of purchase. So if I place an order today, maybe it comes after 2 to 3 months. That can be the maximum lead time for purchase of CRGO steel. So we actually stocked up inventory in the last 2 3 months, so that we are ready with the production of the new capacity. And
Yeah,
looking at our order book, we are already 60% covered with respect to the inventory. So you can actually see the inventory going down by the end of this financial year, and it will return to the normal level.
Okay. And since you report production volume, are these sales volume similar to production volume, or there is a big difference?
No, there is no difference. There is marginally negligible difference because we generally do not have any FG.
Okay. And if
Sunil,
you can
I would
share,
request you to come back
yeah,
in the we again
okay,
have.
sorry, yeah, thank you.
Before we go to the next participant, let me take 2 questions from the chat window. The first question is from Mr. Ashish Kacholia. How is JB seeing itself after 3 years in terms of revenue and enterprise value? How do you see yourself in 3 years from here?
So we intend to move up in CRGO steel as much as possible. That is our first and foremost target because we are experts at that, and it's been 35 years legacy that we have been doing this, and we have maintained good operational and financial efficiency with respect to managing CRGO steel operations. So, if and when we exhaust that opportunity, we will look at various aspects of going into either vertical integration, or we can even look at forward integration. That is the idea. So 3 years down the line, we intend to go to full capacity utilization in all 3 units, and our probably next plan of expansion will probably start once the unit 3 is underway.
The next question in the chat window is from Sanika Khemani. Want to know what kind of price trajectory are we expecting in our raw materials?
Raw material prices, like I said, due to the exit of a few Chinese mills, the raw material prices have gone up. So they are currently at the same levels as they were in FY'24. They may increase, they may decrease. We don't know. It all depends on the global supply and demand situation. But we believe that these are the sustainable price levels which we are currently working at.
Okay. We'll take the next question from Atul Dafria. Atul, and please restrict your questions to 2 initially.
Hi, Mudit. Thank you so much for the presentation and the call. The first point is like, how do you expect the prices in near future? Like, you mentioned at one point in time that, the prices have reduced and the volume increased. So just wanted to take your view for next, say, 6 to 12 months from now.
So, like I said in the previous question, the prices have increased since the last 6 months. I mean, they were actually on an increasing trend, but on an average basis, it was low. So currently, our sale price on an average basis is around 300 310 rupees. And in the near future, it will be going up in the next 2 to 3 months. But after 3 months, after say December, we don't know because it all depends on the next round of negotiation with the suppliers.
Okay. The second question is with respect to like the ultimate, all the your product goes into transformers, transformer companies take it. So have you also seen the transformer prices going down to that effect?
You mean in the last 6 months?
Yes. Or is it linked? So just wanted to have your thoughts whether your prices are linked to the transformer company prices, or they also reduce the prices, or it's only like impact comes to you.
I understand. I understand. So what you're asking is how is the pass on if we are able to pass on to the transformer manufacturers, how are they able to pass on to the end customers, right?
Right.
So essentially, in government orders which are longer to the extent of 6 to 12 months, there are price variation clauses. There is PV clause which governs on the major raw materials of transformers. And once the prices of CRGO steel or copper or the tank body or the oil move up and down, based on that, there is a certain calculation for the month. And based on that, the transformer manufacturers get a better or a lower price. With respect to private manufacturers, there can be price variation clause. There cannot be price variation clause also. But those orders in the transformer industry are generally short-lived. So I think those orders are also in the range of 1 to 2 months. So in that case, they are not. They have back-to-back, purchase orders as well as sales orders. So they are also secured from that angle.
So what I understand is like if your prices goes up and down, it doesn't impact the transformer companies.
No, it does not impact the
So
transformer
it's
industry
ultimately benefit to them, right?
unless and until they don't have price variation clause and have a really long order.
So you can't have in your clauses that the prices, if prices have increased, like prices have reduced, like you can't have a fixed price like contracts with them, right? Obviously it's a order book, you also maintain it, so you also get orders. But if the raw material prices increase or decrease, so your prices doesn't go up and down, right?
Sorry, I didn't get that question. Can you
Sorry,
repeat?
so let me just rephrase last question. Sorry,
Basically,
whenever.
Udit, he's trying to ask that how are you able to manage the price increases or decreases? Are you
Yeah.
able to pass it on to transformer companies?
Yeah, so we are able to pass it on because our order books are small, and if we have a longer order book, so for example, some of the government companies have a longer a rate contract and order book, that those are mostly fixed price contracts. So for that we try to accumulate the raw material in the first place, and for that we need working capital, and which was the reason we wanted to go for the public market where we can have a good strength of working capital. Because CapEx was done all by internal accruals.
Understood. Okay. Thank you so much and all the best for the next quarter.
Thank you.
Thank you.
We'll take the next question from Paras Chheda. Paras, you can go ahead.
Yeah, hi, Miguel. I just wanted to understand on the incremental capacity that has come in October, right? And this is a specific revenue kind of thing I'm trying to understand. That if we assuming 100% utilization of this capacity, what kind of revenue potential can this offer? And the second question being, in case we are able to go up to 30,000 metric tons, what kind of incremental revenue can we expect, or peak revenue, let's put it that way. It's a specific sort of a broad range of numbers I'm trying to understand.
So, considering that amorphous steel is going to be a small part, mostly the sale price should remain in the same range. And considering that, if we consider theoretically full capacity utilization of 30,000 tons, the turnover can be around 900 crores.
900 CR. And on this 6,000 odd capacity that has come in, what would be the incremental revenue potential that has come in October?
About 180 crores.
Additional 180 crores. Okay.
Yeah.
And just another last question. Our EBITDA margins, which have jumped to 15% in this second half, are they broadly sustainable going forward, or you expect them to go back to 10-11% that we had earlier annual numbers?
They will be in somewhere in between 10 and 15. 15 was achieved because of the low turnover base. Like I said, the turnover was low, but the volumes have increased. So, if we consider the PAT margin, it was actually 7.8%. If you consider a similar price range increase of the last year. So considering 180, 185 crores of turnover, if we consider a 20% jump in compared to the last half year, the PAT margins are actually not 9.4%. It is lower. And similarly, EBITDA will also be, we are hoping to target between 12 to 13%.
Right, but your 400 kV and 765 kV class would be generally higher margin products, I would assume. So
yes, correct. So
that will aid your EBITDA margin.
Yes. But our idea is to go as conservative as possible.
Okay.
And project it in a way that is healthy and sustainable.
Yeah. Okay. I'll come back. Okay.
Thank you. We'll take the next question from Namish Gupta. Namish, you can go ahead. We'll take the next question from Abhishek Garg. Abhishek, you can go ahead.
Thank you, Vinay ji, for the opportunity. Modi ji, thank you for conducting this call. Great set of numbers. I just had one small query. You mentioned that our EBITDA per ton sort of remains same irrespective of the fluctuation in the raw material prices, right? However, in FY'24, our EBITDA per ton was around 33.5K, which has now increased to 41.5K. So what is the reason for this increase, and is this sustainable? Is this the new normal going ahead?
So the previous question was also the same, Abhishek ji. We were able to increase the EBITDA because of the volume increase. One reason was the volume increase, which was about 20%. If you see our presentation, we did about 5,540 tons of CRG steel versus last half year that was 4760, around 4760. So that was an increase of about 19-20%. The second reason was that since the demand is increasing and we had limited capacity, we were able to select orders that were suitable for our capacity as well as our margin base. So because of that, we were able to increase the margins. And on a smaller base of revenue, the EBITDA percentage seems higher, but it can revolve between 12 to 13%.
Understood. So going ahead, we should expect a EBITDA margin of 12 to 13% if the prices sort of revert back to normal. Revenue pattern. Understood. All right, sir. Thank you.
Thank you.
Thanks, Abhishek. We'll take the next question from Namish Gupta. Namish, you can go ahead.
सर मेरा एक्चुअली क्वेश्चन इस पे ग्रॉस मार्जिन पे ही है सर। पर थोड़ा सा मैं इसमें सर ये क्लैरिटी चाह रहा था, जो हमारा जो 15 से 23% हुआ, जिसका आई थिंक अभी आपने क्लैरिफाई भी किया आपने, लेकिन फिर भी मैं इस पे क्लैरिफिकेशन चाह रहा हूँ। एक तो आपने बताया कि आपके वॉल्यूम्स काफी आपके बढ़ गए आपके, करेक्ट? और दूसरा आपने बताया कि आपकी इंटरनेशनल मार्केट में जो मेरी जो रॉ मटेरियल प्राइसेस है वो डाउन हुई है। सर इसमें अगर मेरा वॉल्यूम बढ़ता है तो मैं ये एज्यूम करूंगा सर मेरा ग्रॉस मार्जिन नहीं बढ़ेगा सर। वॉल्यूम में सर मेरा सेल का जो टोटल जो टर्नओवर है वो बढ़ जाएगा सर, लेकिन मेरा ग्रॉस मार्जिन उससे इंपैक्ट नहीं होना चाहिए। तो क्या ये जो 15 से 23% का जो हमारा ग्रॉस मार्जिन जो बढ़ा है, ये मैं ये अज्यूम करूं कि प्योरली 8% का जो जंप आया है ये स्ट्रेट अवे मेरे जो रॉ मटेरियल प्राइजेस जो आप फिलहाल बता रहे हैं कि पिछले 8-10 महीने में कम हुए हैं, ये उसकी वजह से है ये, और ये आगे जाके ये नॉर्मलाइज हो सकता है, लाइक ये 23% जो है ये 19-20% कुछ इस तरह का हो सकता है आगे जाके? थोड़ा सा इस पे मैं क्लैरिटी चाहता हूँ सर।
रमेश जी, थैंक यू फॉर द क्वेश्चन। आप अगर देखेंगे ग्रॉस मार्जिन जो हमारा था, दैट वाज 23%, एब्सोल्युटली राइट। बट अगेन मैं आपको ये बोलूंगा कि अगर आप सिर्फ ये चीज को देखें कि हमारा टर्नओवर अगर आप 180 करोड़ अज्यूम करें, कंसिडरिंग दैट प्रीवियस previous sale price. So on that base, it will be 19%. So that is a sustainable base. I'll tell you another reason for that. The reason is we have also, seen our competitors who are currently working in the 400, 765 kV, 7065 kV class. Their gross margins are between 75 and 80%. Sorry, raw material cost is between 75 and 80%. So we are hopeful of keeping in that same range.
ओके, तो आगे जाके इस रेंज को, अभी जो ये फिलहाल जो 23% हमें जो दिख रही है, फिलहाल हम इसको क्या मानेंगे, लाइक 20% के करीब?
कितना?
20% ग्रॉस मार्जिन मानेंगे आगे जाके, लाइक नेक्स्ट हाफ ईयर या फिर नेक्स्ट ईयर
जी
में?
जी 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 जी।
ओके, ठीक है सर, थैंक यू सर।
Unless there is any sudden abrupt fluctuations, these margins will be continuing.
Okay.
Thanks, Namesh. We'll take the next question from Ajinkya Jadhav. Ajinkya, go ahead, please.
Yeah, thanks for the opportunity. Just एक छोटा क्वेश्चन था मेरा कि like we are going from 200 to 400 kilovolt. I look at the PPT of Shilchar. They are going from 33 to 66 and now they into 132. तो ये जो हायर वोल्टेज रहता है इसका यूज केसेस क्या रहेगा, लाइक एंड अभी है या मार्केट इंडिया में नहीं, या फिर क्रिएट होगा, और अगर है इंडिया में तो केटर कौन कर रहा है इसको?
Ajankya ji, we operate with transformer manufacturers in all categories, right? From 10 kVA to 500 MVA, in kV classes of 11 kV to 220 kV class. There are various transformers who operate only in certain kV classes, depending on their capabilities, depending on what market segments they want to target. So, customers like Bharat Heavy Electricals, Crompton Greaves, and even transformers and rectifiers, they make the highest range of transformers to 765 kV class. So the market is already there because these transformers are used in transmission, and the smaller transformers are used in distribution of electricity. So the market is already there. We just have to approach and tap those customers.
Thanks. We'll take the follow-up question from Dhruv Agarwal.
Yes. Hello. Yes. Thank you so much, sir, for the follow-up. Sir, just to clarify, this you said that the 18,000 metric tons would be increased to 25 to 30,000 metric tons. So this greenfield capex will be done when, sir? Like it would be next year only, or going ahead it would be done, sir?
So we were able to, grab the opportunity to get this piece of
land.
As I said, it is a fully constructed property, so we just have to bring in our plant and equipment. So we are in the planning stage. Depends on the timeline of ordering and depends on the timeline of delivery of machines and equipment. We'll be able to come up with those capacities. Right now, the target is in the next financial year. Because first, our main aim will be to go up to full utilization for Unit 2, which is the new capacity that we have already started.
Okay, and one more clarification, sir. You said that this 900 crores would be achieved. So it would be from which capacity, sir? The maximum revenue that you can do of 900 crores, sir?
All three units put together.
At its peak capacity?
At peak utilization.
Okay, and sir, one more question. You said that the prices of CRGO has been increased, and going ahead also you expect it to increase. But contrary, one of the listed transformer players said that the government of India has started giving approval for the BIS certification, and they are seeing, they are seeing the price correction pretty soon. So, what's your take on that, on the same, sir?
So I said that in the short run, it will increase because we have a fair bit of idea of the raw material prices that will, the raw material that will fall in the next 1 or 2 months. That will be used in the next, say, 3, 4, 5 months. Um, After December, like I said, there will be new set of negotiations with the suppliers. So it is very hard to say what will happen at that point of time.
Okay, so okay. And on the competition front, sir, how do you see the competitive intensity in the industry as the JSW Steel and the JSFE Steel has decided to acquire 100% stake in the ThyssenKrupp? So, what's your view on that, sir?
So you mean on the supplier and the competitive intensity, because those are our suppliers.
Yes, sir. So JSW is also into this CRGO steel only, right?
So JSW is coming up with the new capacity, and recently they bought the Nasik plant of ThyssenKrupp. So okay, so essentially right now what is happening is in India there is only semi-processing of CRGO steel. And the remaining part of, the either CRGO steel or their raw material is imported from other countries like Germany, Poland, China, Japan, Korea. What JSW is planning is to make the CRGO steel from scratch in India. Probably that capacity of JSW steel, like their earlier public disclosure, that is scheduled for 2027. So besides JSW steel, most of the quantities besides JSW steel will still be imported in India.
Okay. Thank you so much, sir, for answering all the questions, and all the best for the future.
Thank you.
We'll take the next follow-up question from Agastya. Please go ahead.
Thank you very much, Vinay bhai. Sir, thank you for answering all the questions. A lot has been shared today, which is very useful. But थोड़ा सा historic आपसे एक question पूछना था. We don't have past financials going back to the time when transformer industry में there was a fairly severe down cycle. So during that period, what did you witness in your company? So a down cycle, how does it look at your end?
I think the whole decade from 2010 to 2020 was not very conducive for the power sector in general. So transformer manufacturers and certainly CRGO suppliers also suffered in that supply chain. I think primarily main reason was that the funds were not very liquid at that time. So receivables used to be a problem. But what we've seen since 2021 is that there are two types of demand that are coming. One is that the government demand is already there, where utilities are buying transformers. The demand is fueled by good receivables. So demand has always been there, but it has been fueled by good receivables, which in turn has become healthy for the entire supply chain. The second part of demand, which is probably a surprise to everyone since the start of this decade, was mainly because of renewables. Because of renewable energy, there is a big demand in solar inverter duty transformers, which has increased the production of transformers. The demand of transformers, and I think it will continue to go up as renewable energy is in demand.
But during the down cycle, you were able to maintain your spreads. The problem was only on the receivable side. आपके margins intact थे क्या?
So वही है कि it was all linked to each other. Because of receivables, capacity utilizations were not great, even for the transformer manufacturers as well as for us. So the sales volume did not shoot up, and because of that, operating leverage was not there.
Understood. Operating leverage, I understood, but the gross profit level pay or margins was safe, yeah, they also took a substantial hit. Because the transformer industry was decimated.
Correct. So we are now entering into different segment, right? I mean, earlier we were mainly into distribution transformers between the last
Right.
decade. So distribution transformers are by virtue of the structure always command lower gross margins.
Understood. Mudit bhai, last question for the day from my side. It's on the manufacturing process side and the new plants that you are setting up, right? इसमें ramp up कितनी तेजी से होता है? Is the process fast enough that you can like within a month you can reach optimum capacity utilization given the orders are there, or is it a more prolonged period? Prolonged process where you require probably 1 year to ramp up to full capacity utilization.
If you consider that purchase and sale are not a bottleneck, then you don't need more than 2-3 months to ramp up. Unless there are, the only thing that is stopping you is the teething issues in the machines that you newly installed. Otherwise,
Correct.
there is no stop.
So 2-3 months when you can sort that out.
Correct.
Understood, sir. Thank you very much, sir, for the opportunity and all the best for the coming years. Thank you.
Thank you.
Thank you, Vinay bhai.
Thank you. We'll take the follow-up question from Sunil Jain.
Yeah, thank you very much. Sir, the new capacity, that is Unit 3, what will be the capacity? Any defined capacity is there, or just you said 25 to 30,000, so still that it is not defined?
We are still figuring out. Like I said, there will be a permutation combination which will have utilization of the all three capacities put together. That will go up. But on a standalone basis, I think that unit can do about 6,000 tons.
Okay, so space is the main constraint, or the ordering of equipment and all will also be accordingly?
Sorry, I didn't get that question.
So, see, there are two things. One is the space, and the another is the machines which you are ordering. So you must be planning accordingly how much capacity you should order for the machine.
Right. Understood. So space we want to utilize as optimally as possible. Because of that, we are just in the planning stage. And once that is that we are sure about, and also it also depends on the segment that we want to target. For example, if we see good demand in amorphous, we will actually put more machines of amorphous. If we see more demand in CRGO distribution or power, we will specifically put more capacity of that. So we will take it one step at a time, and accordingly we will order the machines. So the capacity will not be increased in one go. It will slowly and gradually be increased, which is what we did with Unit 2 also. It was although that capacity came in one bit, but we further can increase the capacity in Unit 2 to some extent.
So right now your capacity is 18,000. With 6,000 plant, you will go to 24,000, and thereafter also you will have some scope for increasing.
Correct, because of optimization.
Okay. And second question, and
Sunil, we'll need to quickly move to other participants here.
Okay, thank you very much.
Thanks. Paras, you can go ahead and ask your follow-up question.
Yeah, Mother, just trying to simplify this. Assuming 50% capacity utilization on the incremental 6,300 that has come in for second half of this year, and another 50% of the new capacity probably that will be added next year. Can we sort of put a ballpark number? I mean, it's a range, just trying to put a range, that we achieve a 400 CR revenue this year and about 600 next year?
That is the target.
Oh, yeah, that's it. Thank you.
Thank you. We'll take the next question from Jehan Bhada. Jehan, you can go ahead.
Yeah. Good afternoon, sir. Sir, my first question is on the number of players. If you can classify how many players are there, our competitors in the 220 kV class and lower, and how many players would there be in the 400 and 765 class?
So in 400 and 765 kV class, I assume there would be about 5 to 7 players. But it also depends on who has raw material and who is consistently working with these customers. So I would say about 5 players.
Okay.
In lower range of 220 and below, in the organized space, again there would be about including the 5 that I've talked about in 400 and 765. Additionally, there would be about 5-7 players.
Okay, so around 10 to 12 players totally.
But this market also has an unorganized segment. So the total number of players, on paper would be about more than 100.
Sorry, more than?
More than 100.
Okay. But like in your RHP also, it was written that after the BIS and quality norms have come in, organized players have benefited. So why is it that so that still there are unorganized players?
So they have very small capacities. It is actually very, very skewed.
Okay.
There is a big tail of,
Right. So these 10 to 12 players, sir, would be contributing how much to the industry in mixed terms, let's say?
You mean in terms of total contribution?
Yeah, or total contribution from the organized players versus unorganized players? I mean, majority would be organized, right?
Yeah. So these players would be contributing about. I mean, it's a it's a fairly vague assumption, but I think it would be about 40-45%.
Got it. So almost half.
Yeah.
Right. Okay. And sir, over next 2-3 years, once we start making 400 765 class lamination cores, so what will be their mix, revenue mix in our total revenues? Let's say 3 years out.
In terms of capacity, I can say it will be around. It will be between 20 and 30%. So you can consider on an average 25%
Correct.
in terms of capacity.
Correct. And so last question, like you did explain about that your EBITDA and I mean gross profit per ton is fixed largely, and the realization has caused the movement in margins. But even if I look at the gross profit per ton or EBITDA per ton, they have also increased by 15 to 20% in the first half compared to last year.
Correct.
So any reason for that? Has this got to do with the mix change or something?
Yeah, there were two reasons. One was obviously there was a certain inventory gain, and the second reason, which was more prevalent, was the mix that we changed. When I say mix, it is not between segments or product mix. It is mainly about what kind of orders that we take from the customers. So we sort of had the options to choose specific orders which were suited to our facility, suited to our capacity, because there can be orders in the industry, because the sizes, the dimensions, and the mix of orders can be so varied in our industry. But if say a certain machine that has a capacity of 100 tons per month, it can go down to 50 tons per month if we don't use the right kind of orders on that machine. So capacity utilization is the key, and the orders that had the best margins was the key.
Right. Sir, I'll just squeeze in one more question. Is there like margins are higher on the power transformer side and lower in the distribution transformer core side? And how many players would there be? Like it was written in the RHP that power transformers cores are difficult to make. So if you can throw some light on that.
Power transformer players definitely fetch a better margin because ticket size of each transformer is very high compared to distribution transformers. A standard distribution transformer would be, say, each transformer would be in the price range of 50,000 to 5 lakhs, say, just to give you a ballpark figure. Transformer, while the power transformers can go in crores, so they can be as high as 5 to 25 crores per transformer. So the end customer becomes very, very stringent on the quality standards of the power transformer, because if a power transformer fails, it blocks the entire grid. The entire grid goes for a toss, and the lead time to produce another transformer or repairing that transformer is very big. The transportation is very difficult because each transformer weighs about it can weigh about 50 to 300 tons. So all those factors considered, the quality standards go up significantly in power transformers, and the entire value chain, the entire supply chain has to be like that. So the end customer, does inspection at our premises also for the raw material as well as the final product that we make for the transformer company.
Yeah. Right. Sir, so can we infer that there would not be any unorganized players in power transformers?
No.
Correct. Fine. Okay. Thank you, sir.
Thank you, Jehan. We'll take the next question from Dashrath Bosamia. Dashrath, please go ahead.
Hi everyone. Thank you for giving me this opportunity. I want, first of all, I want to congratulate for a great number. And based on number, I can understand that company is doing really good work in the up to 220 class CRGO. But what I understand that margin and the market is huge, about 220 kV class and above. So what is our plan to address this market?
Dashrathji, you mean the higher segments?
Yes, higher segments, about 220 kV plus.
So the capex.
Because I have done my research and I understand that this about 220 kV class, there is a huge demand coming from all the state electricity board and utility.
Right, you're absolutely right, Dashrathji. The demand is increasing in 400 and 765 kV class, and like I said, the capex that we have done is primarily for 400 and 765 kV class, and to some extent for export orders. Now, those export orders are mostly distribution transformer cores. For the power transformer cores, we are targeting 400 and 765 kV class, majorly because the margins are better. And the second reason is the capacity utilization is also very high and outputs are much better. So it made sense for us to expand in those segments. So we are continuing to expand in those segments, and we will soon target those customers.
I understand, but usually supplying to about 220 kV class and above, you will be needing the approvals from the state utility and the central utility like TVCL and all the other state utilities. So what are the workings on this direction? Are we getting any approvals soon?
Yeah, so how this works is some state utilities have their own approval system, like the central utility, which is Power Grid, has its own approval system. Then there are state utilities which have either approval system or inspection system. They don't sometimes they don't bother about the approvals. They benchmark PGCIL approval, and based on that they say, okay, fine, we are okay with the PGCIL approval, and we will only inspect the premises during the execution of the order. So we are in the process of applying to PGCIL for 400 kV class approval. Once we get 400 kV class approval, we will be able to target those customers, those end customers. And once we prove our ability in 400 kV class, we will then the natural step would be to get approval in 765 kV class.
So are we any close to, if you can commit guideline that by when we are expected to get approval from PGCIL?
Yeah, we will be applying soon. We are expecting the approval within this half year.
Thank you. Thank you.
Thank you.
Thanks, Darshan. Before we take we'll take the participants who have not asked a question yet. We'll take the next question from Pratik Chaudhary. Pratik, you can go ahead, please.
So you said that the majority of the capacity increase that we've done from 11,000 to 18,000, that is for 400 and upwards of kV class of product, right?
Correct.
But the approvals for the same might take another 3-4 months or so. So effectively, till that time, would we be utilizing that capacity for lower kV as in our current products?
Yes. So the new capacity or the new machines that we've installed, they are also usable for transformer cores in the range of 132 and 220 kV class. So one is that we will be considering to do that, and like I said, our order book already has 400 kV orders. I think it was about 18 crores of orders that we have for 400 kV class. So we are already on that path to use that capacity for 400 kV class. These orders, sometimes orders are not received based on power grid approvals. Some of the end customers are also okay without power grid approvals. So we have already started that journey.
Okay, understood. And as a 2 years down the line, in terms of how the industry competitive dynamics may change as far as the demand supply gap is concerned, because there are other players also who are, increasing their capacity by 2x, 3x. So 2 years down the line, where how do you see the demand supply playing out in terms of either, I mean, will there be a mismatch or will there be a glut? What is your sense on please, if you could.
I mean, our strategy from day one before we got listed was that we will take it step by step. Like I said earlier, capex is can be done through internal accruals that we did, and the time taken to put up a new facility was not that long, and to even start that new facility is not very long. We started the capex in Unit 2, I think in December last year, and although there were certain delays, we were able to start the new capacities in about 9-10 months. So putting up capacity is not a problem. The idea is to achieve efficiency of capacity utilization and working capital. Once we achieve that, then we will target the next round of capacities. So, I mean, I don't really have a straightforward answer to your question. It all depends on the market dynamics. But looking at the demand side, I don't see that there will be much of supply-demand mismatch, or in fact, it could be that supply is still limited, but demand is coming strong.
And what is the 3 lakh ton you said is the current production that is happening in India, right?
Consumption.
Consumption. Okay. And what will that grow on a percentage basis over the next 2 years, CAGR?
See, if the transformer industry continues to grow at 10 to 12%, which we feel that it will continue to grow for the next 6 years, at least till 2030, because the government has ambitious plans of putting up installed capacities, right? That is going to be at least 10%. So similarly, CRGO steel consumption will also go up by 10%.
Okay, thank you, sir. I'll get back in the queue.
We'll take a question from chat from Money M. I understand you're setting up a new facility. When do you expect it to reach maximum potential, and what is the estimated additional revenue compared to the current?
We are expecting full capacity utilization in the next in the first half of the next financial year. It could be early also. It could be, but for sure within the first half of the next financial year. Sorry, Vinayji, what was the second question?
Similar, I think, what she was asking. When do you expect it to reach maximum, and what is the estimated additional revenue compared to the current revenue?
Right. So additional revenue, like I answered previously, it would be about 180 crores from the additional new capacity.
Sure. We'll take the last question for the day from Vipul Sangvi. Vipul, you can go ahead, please.
Thank you. Thank you, Modi ji. So all the questions largely answered. Just one question about the industry competitive scenario. Can you tell us about 3 or 4 large competitors of yours whom you kind of encounter in your bidding?
You mean when we bid for orders, right?
Yes.
Yeah. So that would be Crifts Power, Amod Stampings, and Vardhaman Stampings.
Okay. So names like Pitti Lamination, do they figure in your competition? I mean,
Pitti does CRNGO steel, which is primarily used in motors and alternators.
okay. So that's the area we are not present and not planning to venture into as well.
We had a small capacity in CRNGO ENI stampings, but we have discontinued that since the last 6 months.
All right. All right. Thank you and all the best.
Thank you.
Thank you, Vipul. That brings us to the end of today's conference call. Mudit, would you like to give any closing comments?
Thank you all for joining the call. Like I said earlier, please bear with us since this is our first call, and we hope to see you soon in the next call. Thank you so much.
Thank you. That brings us to the end of today's conference call. You may all disconnect now. Thank you so much. Thank you to the management and thank you to all the participants.